We're back for one more segment with Greg Taylor. He's Chief Investment Officer at Purpose Investments, this time to talk about a sector he knows very well. That's the gold sector. We have seen a pretty good rally in the price of gold over the past month or 6 weeks. You think 2023 could be a good year for gold. You say it's one of your favorite sectors.
Yeah, and I think when I'm looking at 2023, I think the other traditional sectors that got us really to where we are in the market for the last few years are really going to start to lag. So that's being the tech stocks, the financials. I don't think they're going to go anywhere in the next little bit. So people are going to have to look for different sectors that have some growth. And I think the materials and commodities in general are going to be an area that people can actually start to get some value added and some profits from. And I think gold in particular could be a sector which might start to shine again this year. It really has been a sector that I think has frustrated a lot of people, because over the years, when you think back to gold and you ask what people want, they say, well, if inflation comes, I want to own gold, and that's going to be the best thing to protect my asset value. And then when you look at this year, where we definitely have inflation, and gold really hasn't done too much.
And isn't that because the Fed is combating inflation with higher rates, and that those higher rates have pushed the U.S. dollar much higher, and there's a pretty solid inverse relationship between the U.S. dollar and gold?
Absolutely, you nailed it there. And that's the reason that we're sitting here in North America. When we look at gold, we always look at a price in U.S. dollars. But if you're sitting in Japan or Europe or London, and it's priced in local currencies, it's actually done pretty well. And so the big call for gold right now is that will we see the U.S. dollar start to peak versus those other currencies? We saw a bit of a break in it earlier this week when the Japanese central bank started to adjust their bond policies and the yen started to move. And if we start to get any signs of life coming out of Europe, this could be setting up that the U.S. dollar will start to peak. It'll come off being the hiding spot currency. And when that happens, with inflation still in the background, it could be setting up a perfect environment for gold. So as much as gold has been a sector that really hasn't been that exciting for people, it's not that bad right now. And I think it could have a chance to be a pretty good one in 2023.
2,000 is the level that gold bugs or gold investors would love to see gold take out and stick at for a sustained period of time. Any chance of that happening, do you think?
Well, there's always a chance. We'll see what happens, and that would be a nice scenario. It would have to take that the U.S. dollar does start to pull back, but then you also need to see demand pick up, and I think that's where you could get a few reasons where demand does pick up from just the safety aspect, and also there's always been this debate about how much did the crypto market take away from the gold asset. Right. The gold market is something else, and if crypto really does go to the sidelines as they start to work out the mess and figure out some of these problems they've had in the last few years, this could be a window here for gold to get some of that real asset safety trade again, and it could be setting up for a decent bounce.
And how would you view then the gold miners? And gold investors always have a choice. One of the fundamental choices they've got is buy exposure to the metal or buy exposure to the companies that mine the metal.
Yeah, and certainly that's where you get the multiplier effect. And it happens in all commodities that when the commodities start to go, you really get the better bang for your buck in some of the producers, because you get the multiplier effect of new discoveries and exploration successes. And that will probably play out if we do get a move in gold. But when the trade hasn't really started yet, the best place to start is with the royalty companies. Mm-hmm. We've got some fantastic royalty companies, with Franco-Nevada probably being the biggest one and one of the best run, most profitable companies in the world when you look at it by a per employee headcount. And I think that's probably a decent way to get initial exposure to gold. And then as the trade starts to broaden out, you can go to some of the bigger producers, the Agnicos, the B2s, the Barricks, and then broaden out to the juniors after that once the trade really kicks in.
And what are your thoughts on the juniors?
Well, the juniors are interesting because, like most commodities, there just hasn't been a lot of exploration globally. So we're not seeing any big new mines being built. And all the seniors, which have got it through this time, are starting to look around and try and figure out, well, where's my next mine? And I'm not exploring, so I have to go buy a junior if I want to get one. So if the seniors do start to jump and start to say, well, we need to get more production, that's where you could start to see some acquisitions and M&A in the sector.
There have been times over the years when central bank sales of gold or central bank purchases of gold have been material to the price. Is that still the case?
We haven't seen as much of that in the last little bit, and there was some speculation earlier this year that Russia would be one of the biggest counterparties in that. When Russia was basically kicked off the global financial system, there was a lot of debate about what they would do with gold and whether they'd start to back their currency with gold. They seem to have moved it more towards petroleum and oil products, but there's always still that chance that gold does start to become an asset that people want to have to back with their central banks, and as people start to, global tensions do start to increase, gold could go back to that safety status.
Greg?